Hello friends, welcome back. I am CA Rehman Bhamani. Last week I had made a video on Tata Motors, and in that video I had received a comment from Mr. Aziz Gilani asking me to make a video on Sumitomo Chemicals. So today we are going to discuss about Sumitomo Chemicals. So first thing first let us understand what Sumitomo Chemical does. What does it sell? What does the company do? So the company manufactures chemical products, and it also manufactures agricultural chemicals and crop protection products, pesticides and all those chemicals which are used in agricultural activities. So this company is not being affected by COVID-19 because it is in agricultural related activities, and as you know, agriculture is not affected by COVID-19 because people will buy food products, people will buy agriculture products because people will need to have food, which is a basic necessity. So this company is immune to COVID-19, so there is no problem that the company would suffer because of COVID-19. Now let's see who are the promoters of Sumitomo Chemicals. So Sumitomo Chemical Company Limited, Japan. This Japanese company is a promoter of Indian company which is Sumitomo Chemicals India Limited. And this Japanese company owns 78.30% shares in the Indian company. As on June 2020 data, this company owns 78.30% shares. Now I will just talk about key events which had happened in the company. In 2010, Sumitomo Chemical Japan, which we recently saw is the promoter company, acquired this company New Chemi Industries Limited in India. This was the first time that this Japanese company Sumitomo Chemical started the business in India. In 2016, Sumitomo Chemical Japan had acquired Mumbai-based company named Excel Corp Care, also known as ECC. And in 2019, Sumitomo Chemicals merged the above two companies and formed one company known as Sumitomo Chemical India Limited. And this company got listed on the stock exchange BSE and NSE on 27 January 2020. So let's see how the shareholders' funds are growing. Who are the shareholders? Shareholders are the owners of the company. So in 2018 March, the shareholders' funds were 954. Friends, all these figures are in crore of rupees. So in March 2018 it was 954. In March 2019 it grew to 1048 crores, and then in 2020 it grew to 1200 crores. So you can see it is growing steadily, not very much growth, not very high growth, but it is growing at a reasonable pace. Loans are very important to understand whether the company is in debt, whether the company has very big loan amount for which they will have to pay interest amount. And in this COVID times, you know, all the companies are struggling to pay their interest payments, but luckily in this Sumitomo Chemical there is very less amount of loan, just 19.40 loans in 2020. It grew little by little from 2018 to 2019 to 2020, but still it was only 19.40 crores. Now let us see the income statement. The sales of the company in 2018 it was 1900 crores. In March 2019 the sales were 2211, and in March 2020 it was 2400. So you can see there is steadily the company is growing. It is not growing at very big rate, but the growth is there. And also the profits, net profits, you can see in 2018 it was 145, then it grew to 165, then 204. So the company is growing very nicely. This was the yearly data I had shown. March 2018, March 2019 and March 2020. Now let us see the quarterly figures. So we'll see quarter by quarter in June 2019, September 19, December 19, March 20 and June 20. So you can see the profits were 51 crore, 129 crore, 0.68 crore. Yeah, December quarter was very, you cannot say very bad, because the company did not make a loss. The company made a profit of 0.68 crores. In March, 22 crores. In June, 79 crores. So if we compare from June to June, still you can see from 50 it had grown to 80. Almost 60% growth. From 51 crore, the profits grew to 79 crores. Now let us see some important ratios. Now I just want you to focus on this return on capital employed. On the capital which the company is using, how much percentage of profits the company is able to generate. So in March 2018 it was 22, then it grew to 24, then again somewhere around 24. So it is steadily it is growing. And return on assets, the assets which the company had put to use, on that they are earning around 8 to 9% every year. So this is very good for the company. Now let us see some more ratios. 3 years CAGR sales and 3 years CAGR net profits. In March 2018 it was 58%. The sales were growing at 58% rate. In 2019 it was growing at 62% rate. In March 2020 it was growing at 12% rate. So there was a very big drop, but still 12% growth is a very good amount for any company sales to grow. Even the net profits in 2018 it was growing at 49%, then at 64%, and then in March 2020 it was growing only by 19%. But this 19%, you can see there is a very big drop, but this 19% growth in net profit is also considered a very good amount as compared to other companies. Now basic EPS means earning per share. On one share, how much the company is making profits. In 2016 it was around 2 rupees, around 3 rupees, and in 2020 it was 4 rupees. So the basic earning per share is very low because the company size is not very big, and this 4 rupees per share is also a reasonable amount, not very low, not very high, it is a reasonable amount. And the PE ratio is 57 and the industry PE ratio is 63. As compared to the industry, Sumitomo Chemical is reasonably valued. Let us also see it on the chart. Current price on 14th August 2020, the price was 270. As you can see, the prices are continuously falling for last 1, 2, 3, 4, 5 days. The prices are continuously falling. And if you also compare it to this from 25th June, which was a high of 317, thereafter the share is continuously falling, and then it rose little and then again fell down. Here the company had listed on 27 January 2020. Thereafter it went up, and then it came down again continuously falling down to 151 rupees. So as you know, in March all the shares were falling because whole stock market was down. Then after it rose. What a wonderful growth it has shown. From around 151 rupees, it went all the way up to 304 rupees. You would have bought at 150 rupees. You would have almost doubled your money in just March, April, May, June. In just 4 months, you would have doubled your money if you would have bought it at 150 levels. But at current levels, 270, I can see that the share price may fall down further, taking a support at this level. Here there is a very good support at 225. So if you want to buy, you can buy at this level when the share price comes down to 225. At the current level, for me, personally speaking, as my opinion, it is my opinion, you may have your different opinion. So according to me, this is a very good company, but the prices are too high at this moment. I will wait for the prices to come down, then only I would purchase if I want to purchase it for the long term. I'm not talking about short term, guys. I'm talking about long term perspective. 3 years, 5 years, you have to wait. But currently, I can see it is too costly. We can wait for the prices to come down to 225 levels. Only then there will be a buy option. If you have any suggestions or any questions, do let me know in the comment section. If you like my video, do hit the like button, share it with your family and friends, subscribe to my channel if you are not yet subscribed, and hit the bell icon so that you will receive all the future notifications of my video. Thank you very much.